Hello, everyone. I hope you've been having a wonderful. How stupid am I? How very stupid. I hope you all had a wonderful weekend. And let's go over the price action. This is the usual market update. Those who don't know and are not a part of the community, of course, do join in. That is patreon.com/investory. Although that potentially is due to change. I think I will. Given how I discovered that there are a lot of investories, like a lot, like too many, I will probably be thinking about going with just my name, I think, because that'll be easier to track, I think, to find me, simply because it's pretty crazy to find me among the ton of investories. And actually, I found out something very interesting. YouTube. This is a finance channel. Do not get confused. Turns out YouTube hasn't classified my channel yet, and I'm not yet classified under any category. And no wonder is that my content is not getting as far of a reach as I would have been hoping for it to, and for it to make sense. In fact, so much effort that I've been putting into the content and the thumbnails and whatnot, just everything and anything that is sort of necessary to succeed. YouTube, I actually discovered this weekend that I'm not per se shadow banned as much as my channel is not classified, and so it basically doesn't appear in any category, nor is it being recommended to the relevant people. So that's kind of a thing. So let's talk about the price action. Those who don't know, again, in my community here, I'm going to brag a little bit. I've actually, in preparation, so to speak, this is my Discord, the Investory. We have the Academy here, which I teach a course one-on-one where I teach how to analyze the stock market, how to identify harmonic patterns, how to understand what they are, how they come to fruition, what is the cycle, what is the momentum like, what volume represents in all of this. Basically, all of everything that you need to know to understand how the price action behaves, and allow yourself to have a set of tools to predict what the price action may do within the following hours. For example, actually, if you want to check this out, I posted this, in fact, as we were still opening the pre-market. As you can see, that was just the pre-market. And although I already had sort of a thesis of established last week, which I was basically saying we will end up moving to close that gap on the left side, ending up roughly at around 6,972.6 right there that you can see, the yellow line, which gradually, as you can see, of course, immediately I kind of broke down. You can see right here how I assessed the price action to play out in today's session, and you can see, and I kept on following up on it throughout various time frames on the continuous contract, informing my members of where is it headed, is it really doing what I've expected it to. And you can see, slowly though, but you can see, I was bragging that I got it all right. As you can see, it's even started moving in the beginning on the same sort of trend directional median, and now you can see that movement gradually making its way to where we are right now throughout the sessions, as was expected, right? How is that done, by the way? That is done by using these technical tools that everybody's scared of. This is not smoke signals. That's actually a highly mathematical system that allows you to understand the cyclicality and the nature of the forces that are influencing the price action, and when calculating them, bringing them together into the singular equation, you can then deduct what the price action may do. As you can see, I was able to do that today from the pre-market, not just from well, basically when the market opened up at nighttime for me, and I was able to predict, as you can see, so far so good. Tracing it, of course, the play around the support and resistance levels, that 6950, 6940 that we saw last week. You can see it on the left side, the acknowledgement of the price action of these levels. Subsequently, of course, when we are between them, we will get entangled with them, revolving around that area, testing it again and again. As you can see, I'm sort of jumping back and forth between the continuous and the regular contract. Yes, it's necessary. It's part of the trick of understanding where the price action is going, especially when it comes to pre-market price action, and kind of where we ended up today. So if you want to be up to speed and you want to get informed, have the community meetings and all that beautiful stuff that I do, discussions, videos that I post, just anything and everything, I highly recommend you guys join the community. The links. I'm stupid again. Was I like in the way of everything? Probably, probably. But that is not that important. No, I wasn't. And the screen is right there in the left corner. So as you can see, even here in advance, I was pretty much able to identify and somehow predict that the price action here will have these three hills, if you will, these three little tops, right? These impulses within that overall wave. Believe it or not, I got it pretty much on point. And just saying. This is just again, this is not the goal. Some people misunderstand. Well, it's not true that you can identify the price action to the scalpel level and actually identify particular support and resistance levels, and of course trade them throughout the day, whatnot. That is not my goal. I'm currently mostly focused on the main general swings that are occurring in the market, especially that turnover effect that we're having, which we, by the way, probably will be discussing in depth today with the academy. Those who don't know, I do have my academy students who are graduates basically of the course that I do one-on-one, and we meet with these members once a week, twice a week sometimes, depends. This week we're about to meet twice, and we're about to discuss all these topics and understand why the price action is behaving around the cyclicality the way it is and what it is to be expected. Right now, for example, you can see already my expectation with the price action on the grand scheme of things is to retrace back to that 6929. The validity of that, the reasoning for it, if we're going to start looking, for example, the 30 minutes, we're already seeing confluence of the forces, basically our slow and fast moving average on the stochastic RSI, which will then, that confluence of forces will show us that transition between the bullish and the bearish. Yes, it still may occur that throughout the session we will end up at 6972. Yes, it may occur so. Simply if we're going to look at larger time frames, we see not all the bullish momentum has been purged yet. So there is still somewhat to go, and we could easily see that level, that 6972, being tested again. In fact, if we look at the regular contract, again entangled within the support and resistance levels, of course, highly important to mention, we have managed to close our gap right here. The leftovers, this gap is no longer a problem. Now we do have a little bit of a gap of today's opening, which probably going to end up closing shortly. Arguably, either in today's session or in the following sessions, we will end up closing that gap when the price action will end up dropping lower to correct back to that roughly around where we have that gap at 6875-ish, kind of where we're within that vicinity. We can see that these lines, these support resistance levels clearly, right, being played out on a continuous contract. Similarly, so again, that 6904, that is that's basically 6890-ish, right? And so here it is, 6850, kind of. That area would be roughly around 6840-ish, 6860, depending on the direction that we move in. Depends on the direction of the momentum, so to speak. And the further out we're going to look, we're going to see we have more and more gaps, so to speak, on the regular contract to be closed, roughly around that area right below here. I remember we had a couple of them somewhere. I think right here we have sort of a little bit of a gap left over, which is that area of that 6.7, right, 6,700. That is the initial area we're probably going to be moving towards. In fact, something I spoke about last week and highlighted how we have, here they are, a whole bunch of gaps to be closed, support resistance levels that were, I wouldn't say created, but acknowledged due to that, right? We still have, here it is, that 6,800, 6,799-ish area. We still have a little bit of a tiny leftover right here, if I recall correctly. We have this 6,890, 6,900, roughly. So we have a couple of gaps there to be closed on the way down. Arguably, these will get filled in on our way to that 679 area, as we said. It sort of is a channel-ish to an extent. It is quite a complicated channel because it's created out of a set of different support resistance levels. Some of them are leftovers from gaps, some of them are Fibonacci retracement levels, some of them are psychological levels. So basically you can see almost this band of support resistance levels that will be tested, and all that just to go back to our 6,600-ish area. Believe it or not, all along we just spent most of that price action moving sideways within the upper band, that if we pay attention, understand the cycle and the actual structure, we can understand that we've been revolving still maybe on the upper band of things if it is with high volatility, but still our main median within the spectrum of the larger time frame, we're still going to retrace back to that 666, which represents our median, in other words. Again, the further out you go, the larger the channels grow according to that, to the data points that they themselves create. The price action creates its own channels, if you will. And by the way, that actually facilitates our ability to identify when the price action is curving inwards instead of retaining that clear, distinct upwards trend, which you can see we're not anymore. We're now moving into this sort of sideways price action, and more so we're predicting how the price action will retrace back to that 6,600, roughly that area you can see right here. Subsequently retesting it, of course, most probably it's going to be very, very uncommon if we just slide through. It's far more probable that we'll end up retesting it multiple times, and when we will then continue downwards, retesting roughly potentially that level of 6,500. But where's all that stuff is predicated from? Now let's look at, since we are now right now on the regular contract and we are seeing some of the volatility that we're seeing play out right now, which, by the way, I would highlight that although technically we're bullish right now and we are seeing the convergence of the forces closing in on each other a little bit right there, close the 50 to the 50 area, I will remind you that technically we are right now in bearish territory, and so that doesn't represent any significant bullish move really, although being objectively bullish. Because further out we go, we're going to realize that our momentum is still very negative. In fact, I'm suspecting that all of this buildup is somewhat in preparation for the government shutdown on Saturday. If things will not change, we'll have a government shutdown on Saturday. And as you can see, that is the main sort of issue that we have, and we are seeing less confluence that we saw last week. Last week we actually saw the two forces finally converging on each other. Yes, it is somewhat normal to see them sort of flow in and out of each other, back and forth until they get locked in. For them to get locked in, since we are on the monthly time frame, we still have a couple of days to go. You guys all know we have 4 days to go, right? And so once that completes, once we are now transitioning into the next month, we may potentially finally see a proper confluence of these forces, meaning the number, that 99 red number, will take over, have a higher value than the green number. That will show dominance of the bearish force, if you will, although really what these represent are not directly bearish and bullish. It is more so an outcome of how the moving average works and how it functions, and that's the culmination of these shorter and longer period. When they converge on each other, we can basically see a runoff of the bullish momentum, that bullish force, and subsequently how it gives way to that bearish force, almost the same way a plane's engines, just kind of die in the middle of a flight. It doesn't start dropping like a rock right away. It glides a little bit forward, losing momentum, and the more momentum it loses, the more it accelerates towards the downside, gravity, right? Similarly, so although we don't per se have gravity, but we have the loss of momentum, and then the reach back to the median, retests of various support and resistance levels. This is very normal behavior for the price action. Again, it is only if you're able to analyze and actually measure these things on a consistent basis and follow up on them that you will be able to identify and recognize that the price action has actually quite interesting cyclicality, which is very distinct and easy to identify if you know what to look at and you know what tools to use. And that's why you can see me hitting these support and resistance levels again and again so accurately, or rather being able to predict that they are where they are located, and subsequently using momentum and all the other tools, which, by the way, I do teach in my one-on-one academy. I teach you about all these tools, how to use them, and all that beautiful stuff, which, by the way, brings me to my very important point. I have only 2 available spots right now, and all of that only because one of my students just graduated the other day. So let's see, what else did I want to mention? I mean, obviously, subsequently to the drop that we're going to have in the S&P, which, by the way, all of that corrective motion that I'm talking about within the subsequent upcoming period that is nothing. If you look at the longer sort of time frames and the longer periods and understand the structure and why it comes to be the way it does, the cyclicality, even if I'm wrong, let's say Greg is absolutely wrong and we're not going to correct to 3,300, which I am arguing, and I will actually be posting soon a video talking about that. I will title it Market Crash. Everything is going to shit and things like that, right? Everything's going to go bad. But it really is what it's going to feel like. And it has a lot to do with the technical cyclicality that people are mostly not familiar with. You cannot identify that something is true if you're not familiar with it. So to speak, you cannot connect the dots. You don't know that the dots exist in the first place, right? You have to know about the dots, understand what the system of connecting them, and only then you'll be able to see the bigger picture. Now, what else do I want to say? Actually, I was thinking about doing this live, but yeah, this is very good. This is a very good thing here that we're looking at. You can actually see the transition and the change of the curvature. I mean, if you want to try and argue that this curvature that is happening right here is the same as this angle and still going on a very bullish trend, then you utterly are blind, and you probably want to go and see a doctor and get a prescription for, seeing glasses, right? For some eyewear. Look, it's not necessarily that you're going to watch this video and expect the price action to break the very same second you watch it. In fact, the same way the curvature is happening here, we may see some form of curving sort of downwards before the price action breaks in a more severe fashion. That's the tendency of the market to do. That's kind of the joke, how people say, expect to, screw say, but rather almost expect the market to give them an announcement and let them know that the price action is going to be breaking, the market is going to be breaking, or whatever date, whatever time. That's not how it works. In fact, the irony is that the price action is yelling at you that it's going to break for all this time. It's just that you are blind to it, and you need to be able to understand what these tools are, what do they represent, what they show, their importance, how to use them all together as an orchestra, because that's how it works. It's not just this tool separately, that tool separately. No, they are working together in tandem to give us this overall thesis of what they show, each and every one of them, bringing it together to a singular thesis, right? To a singular equation, if you will. And that's why we're able to predict that the price action, by the way, of course, we'll be retesting certain support levels or resistance levels, staying in certain ranges. That is actually very indicative. And you can see, by the way, how our linear regression right now is basically gone flat. And you can start to see how it's slowly teetering to the downside. You can see it's no longer actually flat as much as it is having a downward sort of angle to it. Very shallow one, but still, there is an angle developing. That's not abnormal. Again, we're probably going to be retesting this. It's not like we're going to break out of this range today, and probably will retest it multiple times, maybe still until the end of the month. We have a handful of sessions, so I can easily see how these levels will be retested at least once or twice before we end up capitulating from them back down to the levels we spoke about earlier. Again, that's 6,900, 6,800-ish, and 6,700-ish, and the levels, of course, the support resistance levels, the checkpoints in between that we will touch upon that I've mentioned, like 6835, for example. Now, there's a couple of them other ones that are here, the purple ones, for example. That's it, boys and girls. I think that's all I wanted to say. Do not take seriously people who say price action cannot be predicted. Those people simply don't know how to do that. These people should start saying, I don't know how to predict the price action, but there are people who do, and I'm one of them, by the way. So yeah, definitely join the community. It's only, by the way, how did I forget to mention? It's highly important. I hope you guys are able to see this. This $30 tier is actually highly discounted. Why? Because in 4 more days, this $30 tier will become a $50 tier. And gradually, with every month, it's going to be increased $20 incrementally until it reaches $99. So right now, this tier, for 4 more days, is going to be 70% discounted. Join now or literally miss out. You're probably never going to get an opportunity as cheap as this. In fact, those who don't know, the Patreon was locked for roughly 3 to 4 months, and you couldn't sign up at all. The only way to sign up was to the Academy directly. What else, boys and girls? What else? That's it. I think that's all I wanted to say, really. Join the community. You'll get a lot more content. Today we have meetings with a meeting with the Academy members. Probably within a week or so, we're going to have an overall Patreon meeting as well with everyone. And as you saw, guys, I keep my community up to date on a daily basis. I inform them what's going on, where, and how. Of course, we discuss these things, we joke about them, we post various videos and of other creators and talk about them and what other people are seeing. Of course, I do have my portfolio, although there's not a lot of change there. It's not that super interesting. Various posts that we have about geopolitics, tech, finance, whatever you name it. And of course, the Academy. That course is highly valuable. The value of this course is $10,000, boys and girls. I am selling it right now at $4,000. That is 60% discount. It gradually will be increasing. I cannot tell you and promise you that it will be going to 10,000. I don't think I will go that far. It will simply feel counterproductive to the people I want to be teaching how to generate money. But at the same time, these prices will be increasing. So definitely take the opportunity. I currently have only 2 spots. Also, I would highly appreciate it if right now, towards the end of the video, you'll probably have right here and right here a couple of videos. One of them will probably be talking about an emergency thing that I've noticed about Palantir and why you should know about it and how it relates, of course, to the price action we're seeing right now and what it will end up being, because we're seeing very distinct hints in Palantir and other individual assets that we're about to see very similar price action in these individual assets following the market, the overall market. In fact, it's kind of an in tandem relationship that they cause the drop while being affected by it as well. The individual assets, that is. Yeah, that's it, boys and girls. I think that's all I wanted to say. I'll see you in the community. I'll see you on the next one. Join in, don't miss out, because everything will be hiked right now. Everything is tremendously discounted. That is on purpose to allow you, the members, to join in to the growing community. We actually have more than 200 members, I think, altogether, roughly-ish, if I recall correctly. It kind of fluctuates back and forth, but that's not that important. That's it, boys and girls. I'll see you in the community. Bye for now.